Today we're looking at the Q3 results for Nautilus. Things are starting to look really exciting as we're getting closer to their commercial launch. If you enjoy this content, please like and subscribe. Let's dive in. So before we dive into the Q3 results, let's have a look at what this company does. You have the two founders, Sujal and Parag. Sujal is more of the entrepreneurial type. So he started his first business in 2000, a company called Isilon, a data storage company that he sold to Dell for 2.6 billion. So bringing a lot of entrepreneurial experience and cash to this venture. And then his partner Parag was more the scientist of the two, trained in clinical proteomics and systems biology, has more than 100 publications to his name, as well as some patents in AI and proteomics technology. He's currently an associate professor at Stanford and has a pretty extravagant haircut in the colors of the Nautilus logo, so quite some commitment there. The two of them own 32% of the shares, so they have good control. And further down the line, you will see Andreessen Horowitz, so one of the premier venture capital firms in the world. This is how I came across this company. I was basically looking at other publicly traded companies owned by Andreessen Horowitz. They focus on private companies as a venture capital firm, so it's quite rare for them to own publicly listed companies. They have been an owner for a long time, and the benefit of Andreessen Horowitz is that they have a massive network and a lot of experts working there. So through that, Nautilus will have basically access to anybody in the world and a lot of expertise that Andreessen Horowitz brings. So that's interesting. And finally, also Amazon Venture Capital has a small stake in the company. So the product this company is working on is called the Nautilus Proteome Analysis Platform. This gets pretty technical, so I'll just explain it to you using some of their videos.
Until now, precision medicine has largely relied on genomics. Advances in this field have vastly improved our ability to associate genetic variants with diseases, but have only rarely spurred the creation of genomics-based diagnostics and treatments. In fact, large multi-center studies matching cancer patients with genetic alterations to corresponding precision therapies still only show response rates of about 10%. And if you zoom out on drug development more broadly, there has not been a drastic increase in drug approvals since the completion of the Human Genome Project in 2003. Proteomics, on the other hand, can drive the development of precision medicines. Why? Most drugs target proteins, and it makes intuitive sense to look at the proteome and not the genome to find more targets.
The scale of the proteome is incredibly vast. In humans alone, there are roughly 20,000 genetically encoded proteins and millions of proteoforms. So how do we plan on enabling researchers to efficiently quantify the proteome? We've designed a novel solution that matches the scale and dynamic range of the proteome. We start with a simple single-molecule library preparation technique that prepares billions of individual protein molecules for automated deposition at distinct coordinates on 10 billion landing pad arrays. Then, we iteratively probe the isolated proteins with proprietary multi-affinity probes and use a machine learning-enabled framework called Protein Identification by Short Epitope Mapping, or PRISM, to identify each protein molecule. The way this manifests in PRISM is we probe each individual protein molecule on our arrays with multi-affinity probes, which are designed to target short peptide sequences within proteins, instead of individual specific proteins. Based upon its amino acid sequence, each protein has a predicted probability of being bound by each of the hundreds of multi-affinity probes. Each time we probe an immobilized protein, our machine learning algorithm gains information that it uses to boost the confidence in that protein's identity. There is information gained both when a probe binds and when a probe doesn't bind. Zooming in on two identities that seem probable by the end of these initial cycles, we see how the probability of a given identity changes with continued cycles, depending on predicted probe binding in each cycle. By the end of many cycles, it is far more probable that we have protein A than any other protein, and our platform thus identifies the protein at this landing pad as protein A. This same process happens simultaneously at each of the 10 billion landing pads on our arrays. We believe this approach will result in protein identification across substantively the entire proteome. Thus, the algorithm efficiently identifies the billions of proteins on the array based on the compatibility between expected and observed binding events over many binding cycles, using different multi-affinity probes. With our hyper-dense arrays, multi-affinity probes, the PRISM methodology, and advanced machine learning, we anticipate enabling unprecedented access to the proteome for scientists in a wide variety of research fields.
So I hope that has given you a better understanding of what the company does. So Nautilus hasn't actually launched their platform. This is a slide taken from their investor deck from September of their go-to-market plan, and they're currently in the pre-market phase of their plan in 2025. So they're generating data with their platform and they're having it validated by a select group of academic and pharma organizations. And in early 2026, they will move to an early access phase. So that means they will give access to their platform, but only a part of it, focus on tau proteins, to again a select group of academics and pharma customers, but they're starting to build the pipeline a little bit. And then in late 2026, they will have their full commercial launch, which will be open to a broader scope of customers and the whole software package along with consumables and services. And that's when the first revenue should start to be generated. During their Q3 earnings call, Ken Suzuki, the Chief Marketing Officer, who got onboarded about a year ago ahead of their commercial launch, which makes sense, he went into their marketing strategy a little bit. And of course, this is going to be a positive story because this is them selling themselves, but for what it's worth. So they've been working on sharpening their marketing strategy, and they've completed in Q3 an extensive market study. So they interviewed about 250 decision makers across the US and Europe in different types of roles. And the feedback that they got is that they're perceived as uniquely differentiated, Nautilus that is, that the customers are expecting and willing to pay a premium for the product because of its differentiation versus competition, and that they're very eager to engage with Nautilus because they will be able to do things with the Nautilus platform that they're not able to do with offerings that are out there today. So they are encouraged by the product market fit. And then one of the founders, I couldn't quite hear who it was, gave the comment that the platform is as disruptive today as when we first set out to build it. And now we have even more external validation to back that up. So they are happy about their product market fit, which is great, going into the commercial launch at the end of 2026. So on the financials, just a few highlights. Their cash runway is very healthy, extending through 2027. They have about 170 million in cash and equivalents and investments. No debt. Q3 OPEX decreased nicely, but they expect it will increase in the coming quarters as product and market development costs ramp up towards their launch. They don't expect any revenues yet in 2026 because the commercial launch will be, of course, at the end of that year. And then a comment from management: in the first quarter, we expect to make our first commercial hire for tau services initially, and then broad scale as we move on to the second half of the year. So these are salespeople that will be hired to push the product. So let's have a look at their financial statements, starting with their P&L. On the right-hand side here, we're showing the first 9 months of the year. So like they mentioned, OPEX, operating expenses, has gone down versus last year from 61 to 51 million. However, this will be a temporary dip as they're expecting to increase costs as they accelerate towards their commercial launch. So total loss for the first 3 quarters is 45 million. Looking at their shares outstanding, they're pretty flat, increasing about 1 million shares. So that's good in terms of dilution being limited for existing shareholders. Looking at their balance sheet, so here you see the different buckets that make up that 170 million in cash and equivalent investments that I mentioned. So short-term investments representing about 107 million of that. No debt, so a pretty healthy looking picture for them. And finally, their cash flow statement. So their cash used in operating activities is about 40 million so far. So let's say it will end up at 50 something for the full year. That's what you compare to the amount of cash that they have, which was about 170 million, which then gives you that runway leading into 2027. So overall, a very healthy cash position and financials. So to conclude, the reason why I watch these quarterly reports is because I want to know if the story that I have in my head for these stocks is still intact. And that's definitely the case for Nautilus. They're on track to deliver on their roadmap towards a commercial launch by the end of 2026. They have a long runway in terms of cash, lasting them through 2027. They're boosting their marketing efforts ahead of the launch, and the heavyweight investors such as Andreessen Horowitz are still on board. And so looking at the stock, it's currently trading at $1.40 with a market capitalization of 180 million. Now, it's hard to tell what the total addressable market is and the possible revenue attached to it, but 180 sounds pretty cheap to me. If we look back about 5 years, the stock was trading at about $10. Of course, there might have been some hype there, but definitely I have the feeling that the market has sort of forgotten about this stock. Recently, in the past month, it's had a bit of a rally. So maybe that's because people are starting to feel that it's coming closer to a launch. But anyway, to me, it still seems relatively cheap. So I think I'll be adding to my position in the coming months and year ahead of this launch. So thanks a lot for watching. I hope you enjoyed the video. Please like and subscribe. If you do, recommend it to a friend. I'm trying to grow this channel so that I can put even more time into giving you high quality content. Keep in mind, I'm trying to give you the best information I can, but in the end, it's just my opinion. Please do your own research before investing. See you in the next one.